Are you looking to start a business and would like to know how an SBA loan would be structured? In this video, I will break down how a typical SBA 7A loan is structured, what type of loans are available, and how the process can change based on the type of loan. Welcome back to Mystery of Money. My name's Nick, and if you're new here and you're looking for money tips and tricks or ways to make your business run more efficiently, or you're just looking for more information about starting or growing a business, start now by hitting that subscribe button and turning on notifications so you don't miss anything. For this video, I'm going to talk about the startup of a laundromat. This idea was sent to me by Brandon through my Facebook page, and I apologize, Brandon, that it took so long to reply. To get started, what you're going to have to know is what type of facility you're going to look at. Will you be buying a building or will you be leasing a space? Depending on how you choose will affect the type of loan you get. If you're going to buy a space or buy a building, you can look at an SBA 504 loan for the real estate. You're still going to need the 10% down, but it's a way of getting a portion of that as a fixed rate loan. You can also do an SBA 7A loan, but the rate is going to be a little higher than with the 504 loans. And if you want to know the difference between those two types, go ahead and check out this video here. For this type of loan, the main difference would be you would have a real estate purchase and will typically be able to have a longer amortization period or a lower payment since you'll be stretched out over 20 to 25 years. The remainder of the structure will be almost identical without the real estate. Let's say you're going to lease a space. If the space was not currently set up as a laundromat, you're going to need funds to convert that space known as leasehold improvements. Leasehold improvements is anything that changes the physical attributes of the space. These are typically fixtures, plumbing like water and drains, exhaust hoods and vents for the dryers, and so on. These improvements that when you leave the space are going to remain in the space. Typically, there is no collateral since the leasehold improvements are considered part of the property once they're installed. Next is going to be the equipment loan. This is going to be for the washers, the dryers, folders, or any other typical equipment that you may need. This is typically going to be done on a short-term lending basis. Most of the time, the useful life is how long of a loan the bank and the SBA will do. This type of loan will be secured by specific serial numbers of the equipment filed against the business. There are two more parts of the loan that you're going to have to address in your business plan. One will be a short-term working capital and one will be long-term working capital. Long-term working capital is defined as anything that will be paid off in longer than a year. Long-term working capital will be things such as hiring employees, marketing, advertising, or any other equipment that doesn't have a specific serial number. This could include things like laundry baskets, laundry racks, coin machines, or other small equipment. For short-term working capital, you're going to use a line of credit. In your business plan, you're going to talk about how you're going to use the line of credit in your everyday business. A short-term working capital line of credit will be used for things like buying soaps and powders, filling up your coin machines to begin operation, and other uses that you would typically pay off quickly. To give you an idea of what a rough SBA loan would look like, it would be broken down in these parts: leasehold improvements, long-term working capital, and short-term working capital. Your total sources of funds would be broken out like this, including your equity injection of at least 10%. Basically, the total source is going to be what is the total amount of money that you're going to use to start your business. After that, you're going to put a total uses, and you're going to break them out very similarly like this. This will be broken out in your business plan portion under sources and uses, and you're going to explain each one of those sections in different parts of the business plan. I hope this gives you a better idea of how SBA loans can be structured in order to start a typical business. If there's any other businesses that you'd like me to go over on how the structure could potentially be laid out, post them in the comments below, and I'll make sure that I get something out like that in the future. Thank you very much for taking the time to watch this video. If you'd like any other videos on topics like this, let me know in the comments below, or if there are any other topics you'd like me to cover, let me know that also. I wish you the best of luck in your business, and until next time, have a great day.